Hi, good afternoon, everyone. Thanks for joining us. I just wanted to log in a few minutes early here and welcome you. If some of you could please just type into the question box that you can hear me okay, that would be very helpful. Thank you, Ben. Thank you, Harold. Thank you, Orlin. Okay, sounds like we're good to go. You should be able to see the disclaimer on the screen. And we'll just give everyone a few more minutes to log in and get settled. We'll be starting right at 3:30 Central. Thank you so much, everyone. Okay, thank you so much for joining us, everyone. This is Chad Robbins from World Cup Advisor. Today, we're lucky enough to have one of our top advisors, John Ehlers, with us. For those of you that are not familiar with World Cup, just want to do a really brief introduction. World Cup, we're going to cover how Auto Trade Trading Service with WorldCupAdvisor.com works today, specifically looking at John Ehlers trading. And then it's also going to cover World Cup Advisor tools that are available to you for analysis. Now, the World Cup Advisor business model was built on these two pillars, the World Cup Trading Championships and WorldCupAdvisor.com. World Cup trading events are the longest running real money competitions in the world, and WorldCupAdvisor.com offers an auto trade trading service where subscribers can automatically follow some past champions and current leaders in the World Cup trading events, as well as Mr. Ehlers' program. Without further ado, John, please go ahead and take the mouse from me if you can.
Okay, can everybody hear me and see me? I'm having a little problem myself here. I don't have a screen, Chad. I'm sorry.
Sorry about that. Let me. Okay, John, no, we're going to have to pull up. Bear with us, everyone. Sorry. We're live. John, you able to see the screen now? John, you able to see the screen now? I can't hear him. John, you able to see the screen now?
Okay,
You can?
I'm unmuted. Am I broadcasting?
Now you are, yes. Can you see the screen now?
I can.
Okay, great. Okay, give him the keyboard, please. Okay, you should be okay now.
Okay, great. Hi, everyone. Sorry for the little misstep there. Trying to get going. I'm John Ehlers, and welcome to this webinar. I trust that I'm going to have something very interesting and informative for you today. Many of you may know me because I've been around trading for quite a while. I am a retired electrical engineer. I am a private trader, have been for about 40 years. The way I got into trading is I got a bonus one year, and I either had to get into real estate or trade commodities, and the margin leverage attracted me a lot. So that's how I got started. And because of my engineering background, I saw what was going on in technical analysis, and I thought in the land of the blind, the one-eyed man is king. And the market has seen fit to give me a couple sobering experiences, training, and in that. So I've been around a while. I know the real effects of trading, and my goal is to bring some science to this art of trading. And towards that end, one thing I've done is I've brought the MESA cycle measuring program. I knew from my engineering background that Fourier transforms were not the way to measure cycles in the market. It's just not the right tool because of the characteristic of market data. And so I introduced the MESA system, and it's been around for years and years and years. And I've talked about cycles in the market at conferences and seminars. I've also written 4 books published by John Wiley, and I'm the contributing editor for Stocks and Commodities magazine. And would you advance the chart, Chad, please? So we're going to talk about prediction because prediction would sure make life a lot easier. Prediction is difficult, especially about the future. And so what we have done in the past is do some linear extrapolation, that is testing the trend, the way the market is going, the rate of change, and just run that into the future, which is great if you want to forecast a trend. But the turning points are just not there because it's a straight line extrapolation. In the technical field, Kalman filters try to use acceleration to improve the prediction. It's useful, for example, in artillery ballistics, trying to get a better path for the shell using the acceleration term. But all of those things don't necessarily apply to the market because, first of all, market data is noisy. It's not chaotic, but it is noisy. And the kind of noise that the market consists of is called pink noise. Pink noise is kind of like, at the audio level, it's like raindrops hearing, as opposed to the white noise that you hiss that you might hear on an untuned channel on the radio. So by pink noise, that means the data is fractal, and which means it scales with time, and it also means it is a kind of noise with memory. But so all of those features describe the kind of data that we're working with. And because it's noisy and variable, it's characterized as being non-stationary. That is, this noise pattern that you see, you will never see again. It will start out the same, and change midstream. So patterns are there, but they never repeat in the statistical sense. And in my humble opinion, they don't repeat good enough to even be useful for trading, but that's me. So let's look at some other ways to attract how we attack this noisy market. Next chart, please. Every indicator you use, whether it's a stochastic or an RSI or an MACD, it's basically a model of what you're expecting to see in the market. You're cutting out one feature or another in order to isolate the trading opportunities. So in my case, I'm going to vector you in a direction that I go in my own trading, and that is even the most casual observer can see that there are cycles in the market. And it may not be easy to identify them, but you can, and measure them, but you can see them. So because it's so difficult and embedded in noise, let's start with simplicity and use a real noise-free stationary model. That is, it's consistent always. And that model is simply has the mode of a sine wave. A sine wave is a primitive wave that comprises more complex waveforms, but it is a pure oscillator that swings up and down as a function of time. And so one characteristic of a sine wave is it has a periodicity. It repeats itself exactly. And so given that you know how the sine wave is going, you can predict the next turning point. For example, if you're at a cycle valley, you can predict into the future that the correct exit point for a long position is a half cycle more into the future or at this next cycle peak. And by the way, if you want to trade short, that cycle peak is the time to go short, and you want to stay in that position for another half cycle down to the next cycle valley. Now that's a pure sine wave, noise free. Now, in a model of the market, one thing that I prefer is a bandpass filter. And it's kind of, as the name implies, it passes a band of frequency components that are in the market data. It will throw away the trend component, and it will throw away the real high frequency false signals that don't contribute to your trading. But there is a band of frequencies or periods that it will pass. And if it incorporates several periodic components, the result is that the waveform at the output of that filter is almost periodic, but it is not exactly periodic as the pure sine wave. So because the market consists of all of these frequencies in pink noise, what we do with the filter is remove all of the components we're not interested in and create a band limited replica of the entire data set that contains only those components that are useful for our trading. And next slide, please. So what we do with that model of the market, well, going back, looking at linear extrapolation, it's not a good idea because it doesn't predict the turning point. And we can do a MESA prediction. That's pretty sophisticated. It is computationally intensive, and I've found it's not necessarily intuitive. You have to work with it quite a while to know how to effectively use it. So what I have found is very effective is to combine this bandpass model of the market with a Voss predictive filter. The Voss predictive filter takes multiple time delayed feedback terms to accomplish an anticipatory coupling, and that leads to a negative group delay. That means that it it is a truly predictive filter, but it does not require any precondition on the original filter that it's predicting. That is, it is a universal generic predictor. And so that means, as far as trading is concerned, it is robust. And by the way, it has some self-healing terms in case of errors. If you're comparing the prediction to the original model, and your original model has an error term because there's some trend components still leaking through, the trend component will also be in the prediction. So it works because it is band limited, and it will faithfully predict what the original model has generated out of the basic data. And by the way, here at the bottom of the chart, you see the link to the paper from which I got the predictive filter. The derivation is, in my judgment, pretty complex. However, the filter that results from it is super simple, and it's much simpler than, say, a MESA predictor. So it has the advantage of being easy to implement and include in your trading strategies. Next slide. So here is a picture, happens to be of SPY on daily bars, probably a little over the last year. And you see how the band pass red line is a model of the market. Chad, can you see my cursor?
I cannot. I tried to pass it to you. It didn't go through, I guess.
Okay. Let's start at the left-hand side. If you can read November, there is a peak in the red line right there. And you see, if you go vertical to the price, that is exact peak of the price. And proceeding to the right a little bit, you go to the cycle valley in the third week in November, and you see that's a valley in price. Proceeding on about another week and a half, you have a peak in the oscillator at the beginning of December, and that is a peak in price. And to the last week in December, that's when the market bottoms out, and so does the indicator. So our model of the market is accurately capturing the peaks and valleys. Of course, going on to the first week in February, we have a peak in the oscillator. First week in February, or January, I'm sorry, first week in January. And we have a spectacular failure of the model because the trend keeps on going. And the reason is that our model, in addition to tracking the components, it has memory of the big swing down at the end of December, and it's recovering back up. So it's recovering from that swing. So like all indicators, this is a failure mode for the bandpass filter. And it's simply, I'll in generic to every technical indicator, that you have to worry about transit responses like that don't fit the general case. So it fails once in a while. But if you go along to the right and you can just compare with your eye the peaks and valleys of the price compared to the peaks and valleys of the oscillator, you'll find that you have, in general, a pretty good replica of the prices that make it suitable for swing trading. The idea, but the problem is when do you know it's at a peak? And that's where the predictor comes in. And the reason you don't know it's at a peak, if you look at the distance between the zero crossings, the zero line is that blue horizontal line. You notice that the length between the zero crossings is different as you go across the screen, which means that the data is non-stationary. The periodicity of the cycles is changing as a function of time. The bandpass filter is tracking that periodicity change, but it makes it difficult to know when you're at a peak and a valley. And that's where the Voss predictor comes in, because in the next chart, you see the predictor overlaid on the original bandpass filter, and you know it's a predictor because the whole waveform has basically been moved about 3 bars to the left. And so you see the yellow line crossing under the red line at a cycle peak and crossing over the red line at a cycle valley. In other words, the line crossings of these two indicators constitutes buy and sell signals, or buy and sell short signals. And it's that simple of a system. That to make a strategy from this indicator, you have to add some other components. For example, in the middle of the chart, in the March, April, May timeframe, some of those cycle swings are pretty small, and they may not be tradable because the swings are so low in amplitude. So you have to put an amplitude threshold on the original model as well to keep from trading signals that may not be advantageous or may not have a big enough swing to make it productive for trading. So that's a basic idea. The predictor takes a band limited model and is a generic prediction, moves the red line basically to the left. And naturally, when you make predictions, it gets a little more noisy. But there are trade-offs between the original smoothness of the bandpass filter and trade-offs involve smoothness versus the transient response. And I've kind of struck a half medium here in the presentation. Next chart. So the Voss predictor is available as an indicator. It is an excellent swing trading indicator. I'll call it proven in intraday trading because I trade it in my own account. And the way that you can get the predictor for yourself in stocks and commodities, there is a Voss predictor article, and not only does it have the code, but there's a more detailed explanation of what's going on with both the bandpass filter and the predictor itself. So the code is there, and I will go. This is kind of a little. Here comes the sales pitch a little bit. I will be talking about the Voss predictor in my 3-day workshop in October, coming up in a little less than a month. And not only will I be talking about the predictor, but a number of other unique indicators that I've developed. And along with I've just had a revelation about walk forward and how often one needs to do a walk forward optimization of parameters. I'll go into that in depth. And so I have some unique perspectives on that in the workshop. Next chart. So it's a 3-day workshop. It's pretty intimate. Just a few traders are there with me. We'll talk about anything and everything. It's held October 20th or 18th through 20th. And you can go to my website, mesasoftware.com, for more information about that. And I'm sure that Chad is going to show you how you can also follow my trades on World Cup Advisor. So, Chad?
That's exactly right. Thank you so much, John, and thank you for the excellent presentation as usual. So everyone, please visit mesasoftware.com to learn more about John Ehlers and his workshop that's coming up in just a few weeks. Now, John did mention that I'm going to be explaining how you can follow his Mesa ES Day Trader program on WorldCupAdvisor.com. For those of you that are not familiar, World Cup Advisor provides a trading solution for many investors. We identify talented pro traders like John Ehlers and enable subscribers or investors to seamlessly mirror their live trading in their own personal accounts on a fully automated basis. What makes World Cup Advisor unique is that all the advisors have their own money on the line, right along with all of the followers. So of course, John has his own account with us and is executing those trades. So what is auto trade service specifically? Now, this diagram here illustrates how the auto trade service works. All advisors trade their own accounts with their own money, so we can have our advisor here on the left side. Now, World Cup Advisor's leader follower trade sync software quite literally intercepts the advisor's orders and redeploys them to the market in block orders. This process allows for average price fills for the advisor's accounts as well as all of the followers. This means there's zero slippage when the followers receive the same exact fill prices that the advisors do on every single trade. Now, there is exceptions to this, and that is when we place trades outside of the auto trade block, when we synchronize new investors coming online to follow a program, and when followers elect to stop following and we exit you out of the program. Those are the only times that your fill prices would vary. Now, all the trade information is simultaneously routed to the World Cup Advisor site, so followers can monitor the advisor's trades in real time. You don't have to do that, but it is available to you. We do the execution automatically. Now, if you are following the Mesa ES Day Trader program, you will also get live update emails. This here is just an example of what a live update looks like. So if you had an account following John Ehlers' Mesa ES Day Trader program, and you were having those trades executed automatically, you'd get one of these anytime John does anything, places a new order, cancels an order, or in this example, gets filled on an order. Now, you don't need to log in and use these for anything other than to keep yourself informed. We will execute everything automatically, whether you log in or not. Now, this here's a screenshot of John's Mesa ES Day Trader program's open position section on the site. Followers can log in to view the current open positions marked to the market in real time. It's going to disclose which market and how many contracts are being traded, and whether the advisor is long or short, and what the current profit or loss is on that trade. Now, this is a screenshot of the Mesa ES Day Trader program close positions. So followers as well as guest members can log in and view all of the closed positions. So you don't have to pay to access this section. This is a full trade-by-trade track record of the account. There's a no paging feature you see here with this big red arrow that you can click on that will list all of the trades on one long sheet. It's designed so you can copy and paste it to export the data into Excel or whatever other software you might be using for your analysis. Now, all followers or subscribers get a daily and monthly statement from their FCM, just like any futures account, to keep yourself informed. And all advisors have a full bio page posted on the World Cup Advisor site. This is a good place to get to know the advisor's background, education, trading methodology, and their approach to the markets. All World Cup Advisor programs have a specifications page as well. This section discloses which commodities are being traded, how long the program has been trading for, how much capital the advisor started with, what types of orders the advisor uses, the methodology that's being applied, and the amount of the advisor's monthly subscription fee. Now, all the advisors are compensated by the flat monthly subscription fee. They do not participate in commission or incentive fees or management fees, none of that, simply the flat monthly subscription fee. Now, we do everything on a per unit basis, at World Cup Advisor. It's somewhat unique to us. So a unit is the equivalent to the quantity traded by the advisor on each trade, and it may vary from program to program. We always recommend that followers fund their account with at least the advisor's matching funds amount. Matching funds is an amount equivalent to the leader's account current balance and is necessary in order to realize the same percentage gains and losses and drawdowns as the leader account going forward. Funding an account with an amount less than the current matching funds level will result in greater leverage, increase the risk of loss, and may prevent clients from following all the trades made in the World Cup Advisor's account. In other words, we always recommend that you enter a program with the same amount that the advisor is currently working with. If you do want to enter with less than that, we handle that on a case-by-case basis and discuss it individually with the client to see if they're suitable to do that. Now, all World Cup Advisor programs have a full performance report available for review. Above is an actual and example using John Ehlers' Mesa ES Day Trader program. Now, this is just a PDF document. Anyone can log in with a guest member login on worldcupadvisor.com for free and download the PDFs for your deep analysis. It discloses, of course, the monthly returns and annual returns, as well as the drawdown section with recovery information as well. So for investors that are interested in perhaps diversifying into more than one program, we do offer combined reports into one report. So this here is just an example of 4 different advisors' performance reports blended into one portfolio. So we create these on a case-by-case basis, depending on your investment level, your risk tolerance, and what your goals are. So if you are interested in doing this, please reach out to World Cup Advisor. We can help you and create a specific one for you. You can certainly create a guest member login at worldcupadvisor.com. For those of you that might be interested in competing in a World Cup Trading Championships event, you can access more information on our current events at worldcupchampionships.com. For more information, or if you have questions on anything, please reach out to us with a phone call or email. We'd be happy to assist you. At this time, I wanted to thank our audience for sitting through our presentation today. Really appreciate it. John, thank you so much for your excellent information today as usual, and I look forward to having you as a guest speaker again sometime very soon.
Thanks, Chad. Thanks for having me. And thanks, everyone, for dropping in and listening to what we had to say.
Thank you, sir. Have a good evening, everybody.